The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we saw the grain markets find a little bit of pressure led by that soy complex on Thursday. Bean oil could not maintain its streak of consecutive higher sessions, while corn and wheat were down slightly. Cattle futures found a little green. Hogs under some pressure ahead of the hogs and pigs report. What are we looking at in this market trade as we near the end of the week and the end of the month? Got a quarterly grain stocks report coming up on Monday that we might need to think about a little bit as well in this trade. Let's talk about it. Joining us now, Brian Doherty, Senior Market Advisor with Total Farm Marketing. Brian, good to talk with you again this week, sir. And, we've been finding a little bit of positivity in this graded oilseed trade the last couple of sessions for the most part, but Thursday kind of faded some of that enthusiasm to some degree, I would say, especially in that soy complex, Brian.
Yeah, Jess, exactly right. Heck of a week. I mean, you look at what happened with the market really breaking out to the top side on Monday, Tuesday up nicely and then backed off some. Then yesterday, good strong close, and today, good strong morning, but not a strong close. Still, nice looking chart, nice pennant formation, nice break to the top side. Beans have gained over $1 off of their lows, almost 11% in value. And if you've listened to me for a while, I've always said, for some reason people start. It's just human nature making changes or ideas surface when about a 10% change in value and something increases, right? So it's a little bit over 10%. I think farmer selling likely picked up. 6 to 10 day forecast yesterday looks for above normal temperatures, below normal precip. So we know harvest is just going to roar. You got some delays maybe in parts of the Midwest with I think it's I don't know if it's a tropical storm or Hurricane Helena right now. I think it's Helena. Maybe I should look at that a little more. But the rain's going to come up into that southern Illinois, Indiana region, talking 2 to 3 inches. That'll slow things down. But those guys have been running pretty wide open anyways. So a really nice looking bean market with a hook reversal down today. Not the most prominent signal you want to see. Corn had nice follow on the way up, got up as high as 419 today. Remember the recent low is 385 and the contract low. So you're looking there at a really solid, what is that, 19 and 15, 34-cent recovery. You got some technical resistance at that point. Wheat's got a firm undertone. Continue to look at that Black Sea region as maybe problematic. But again, there too, disappointing close today. Still forming the right shoulder of a head and shoulders formation that would point lower unless it can break out to the top side.
Well, I have to think about this too. You mentioned maybe some farmers selling at play, and I've heard some talk of that. And I guess, as we think about what's coming off the combine here per se, it feels to me that a chance to reward the rally and farmers maybe need to worry about the bushels that they can't store and they have to go to town off the combine here in this window would maybe be a good point to get started if you haven't done anything or if you're behind on some of your marketing right now, Brian.
That's exactly right. And kind of when you step back and look at things, the more things change, the more they stay the same. So if you kind of look at this year, we've had this downtrending market, get a post-harvest recovery here. It's okay if you're a little bulled up on southern hemisphere weather or maybe some crop reduction estimates out of maybe our beans because of the lack of moisture. But still, you get a rally. You got to figure out what to do with this crop. If you're going to have overrun, do you sell it now? Do you wait? Do you pay commercial storage? So all those marketing decisions have to be weighed quite a bit. I think given that when I say things, the more they change, the more they stay the same, cash flow is a little tighter this year. You have higher interest rates compared to historically. You've got to think about, do I store? Do I not? Do I sell the beans? I think a lot of farmers have been, this isn't pointing fingers. It's just the way it panned out this year. Prices downtrended from last fall, basically. So there wasn't really any no-brainer, easy to make sales. Now it's time to catch up, and I think that's what's going to keep the lid on some of the market rally potential right now, unless that southern hemisphere dry pattern in Brazil just exasperates, and then that overruns everything. But there is rain in the forecast.
You mentioned the hurricane. There's also the potential of port strikes on the East Coast and the Gulf Coast here next week. And then throw on top of that quarterly grain stocks reports out Monday.
Right.
Quite a few external things here. How much are you paying attention to all of these different external things? And that's not even to mention geopolitics and issues
That,
there.
and
But
not to
yeah,
mention it's the end of a quarter as well.
yeah,
So,
yeah.
are we gonna are the the funds been sort of ahead of themselves and book squaring here, starting a couple weeks back and saying, there's not a lot of risk, or a lot of potential, maybe a lot of risk being short grains, and the equities have had this big run. So are they going to balance their portfolios a little bit to lighten the load maybe on equities and get more hardcore commodities? All of these things, right? Then you got the quarterly grain stocks report, and the reason why this one's going to be so, I think, important is because it could contain surprises. I'll take you back to last November. I'm going to take you to last January. USDA raised corn yield in both reports by over 2 bushels on each, 4 bushels an acre. They found, let's call it post harvest. Is it there? Were they way undershooting the crop, or did they get a little overzealous in that? And is there room for some retractions? Now, basis usually tells the story. I wouldn't say basis has been so hot that it's telling us that the inventory just isn't there. But there's been some pretty good basis moves to encourage farmers to sell and move corn and get it into the pipeline. There's a lot of old crop that had to go, but there's a lot of end users too that this time of year have been looking to secure cheaply priced commodities. I've said this before. We look at this and go, oh boy, December corn's 413. And we say, oh boy, because to an end user, we think every end user looks and go, oh, I can't buy that with just 385. 413 is a cheap price for corn. I'm using the board, assuming no basis. It's just a cheap price for corn. 385 is better if you're a buyer, but you're not paying 685 and 585 and $5. So I think the end user just continues to buy right along, continues to use it as far as these in a responsible fashion. As far as these port strikes and things, boy, I got to tell you, there's no manual, so I can write it down on a piece of paper, kind of rip it up and throw it to the wind. I don't know. I would typically say, I would say these are typically short-lived, and consequently that tells me that um, the market will assume we'll be on this, but I don't know. It's something that we might need to monitor quite a bit, and I don't know how to quite analyze it other than, if things turn negative, it could mean that we all of a sudden have gluts of supply in the near term. So if you really need to get something like moved and sold, do it sooner than later.
Well, I think kind of tying in with all that, some of the theme that you and I have been talking about now for several months is, and especially case in point with this recent rally in grains. Maybe, it's not a time. I know you're busy with harvest and whatnot, but don't bury your head in the sand. Make sure you're executing that marketing plan and taking advantage and rewarding the rally if you need to, Brian.
Yeah, you have a good point. So as a farmer, you're tasked with really two things. The one you really probably love, and that's being creative and being a producer and getting things done and working. And the other one you might loathe or not like so much is the inventory manager. What do I do with this? Every decision, it's either not enough sold or it's too much sold, or so you can constantly beat yourself up. But it's what you do. And if that's what you do, then you have to, from my view, and my view is a learned view from watching successful people be successful. And they dedicate some time, they look at it, they make decisions, they understand some of the strategies that they can do and what they can work with. Case in point, we've had a good rally, like I said, in beans. Talked to some farmers. One guy, he's got a really good handle. He says, you know what? I'm going to sell some of these beans. I'm going to go back in, retain it with a bull call spread. That's buy a call, sell a call. I know what my risk is. Got the beans moved, got my cash flow. Next guy I talked to, he kind of him haws like, well, what if it goes up? If it goes down? A little bit more stress for him to make that decision. So my encouragement is just kind of get well versed, talk to people that can help you execute and achieve, and know what the potential outcomes are. Which in some cases, doing nothing is a good strategy. In some cases, it's not a good strategy. It's still a strategy.
Very, very true. Brian, as well in the livestock trade, kind of just a mixed day there. I was happy to see hogs worked off the lows a little bit ahead of the quarterly hogs and pigs report, but meantime, cattle finding a little green. Felt a little quieter in the broader protein complex on Thursday compared to the grain pressure.
Yeah, interesting day. Higher cash cattle. Okay, so that's the backdrop. Let's start with that, and that all of a sudden got a bump in the October contract up to 184. and that's been your laggard. In the deferred months, it seemed like we saw the traders reverse some of the bear spreads. So they were buying October and then selling, let's say, December and February. Good underlying demand is still in the beef market. It's just, do we have demand or growing demand to really punch it much higher? And that's why we're at such a critical crossroads around this 184 on December cattle. Limited supplies of feed are keeping under tone there, but with corn prices kind of creeping higher, maybe a little bit of defensive posturing in the feeder complex. I think the bigger concern is, we talk about lower interest rates, right? This affects hogs as well, and even the dairy products. We talk about lower interest rates. Well, that's great, but you go to a consumer in the store, because interest rates are dropped last week, they're not seeing any change in the store, right? So that's not going to change anything. The consumer who's dealing with inflationary issues, and the rate of inflation may be now slowing, but it's still inflationary, and the real incomes in theory are not keeping up. So that's the demand side that I have worry about in all three. Obviously, pork, poultry will probably fare better in that environment from a demand perspective than maybe cattle, but still, the dollar has to be stretched a little bit more. Nice to see hogs trying to show some strength there, come back, but still not a robust, like really strong market. I just think they got so beat up so hard here recently that to come back, and you got October $82, but gosh, it wasn't that long ago. The July, and they were 68. So big improvement there. But I think cattle, hogs, at levels where I think you need to really think about as a producer, how do you defend that? How do you keep the top side open? Talk to your advisor about that. What kind of put options should you use? How far out should you go? What is it that we can look at? That takes me to one other topic you and I usually don't talk to, but let's kind of look longer term in the energy complex too. Crude oil prices coming down. Look at call options 6 months out into April, $4 or so for a $70 call. Crude oil, the Middle East, the whole Middle East, Ukraine, Russia, all that to me is a powder keg that could just explode. So things to think about, despite Saudi Arabia indicating that they would probably increase production.
I'm glad you brought that up with energies, something that I think a lot of producers definitely need to keep an eye on too. And I want to ask you about the dairy trade. I know World Dairy Expo coming up next week. I know a lot of folks in the industry will be there in Wisconsin, and I'm sure they'll be talking about some of the volatility that's been in this dairy market here as of late. What's the latest you're seeing there, Brian?
Well, they should be talking about volatility because it's provided opportunity, and so it's a little bit softer again today. So it kind of feels like the market is running out of steam. This is kind of a one of those things where we had a big blow up last week in October. Milk 24.46. Now 23.32, not anything to panic over, but certainly down under the 3-week moving average today. So that kind of, concerns me a little bit there. And then when I look at all of the class 3 prices, the front months have had some really good pricing opportunities, and continue to look at that. We don't know if a top is in. Nobody knows when top is in until it's well past. I wouldn't say that we've had massive topping signals, but we've had some pretty spike days, a lot of volatility with spike high days where the market doesn't finish that strong. That tells me that the hedgers probably selling those spike days, and that the belief that upward momentum is going to continue is doubtful. With all that being said, I'm a little more optimistic on those Jan, Feb, March, and maybe all the way Jan through June contracts. First half of the year got have a little more room to work up, but keep a really tight eye on that. Again, you become an inventory manager here. Well worth the watch.
Brian, anything final you want to share or reiterate for folks here today?
I had a lot of big picture kind of philosophical things here, but I think on the beans, you've been handed a pretty good little bounce here. I can tell you this: in July, we read about these price levels, and then it fell off, and there were no shortage of people that I talked to that just felt horrible that they didn't do something right. Well, here's your second chance to get a little something done. If nothing else, make a small sale, but take some action. A lot of times just taking action relieves stress. And right or wrong, you've done something, you've contemplated, and this is a rewarding price level compared to where it's been. So it's not all, it just can't be all bad. So take some action. In particular, to beans, I think you got to do something a little bit in corn too if you're contemplating whether a commercial store or maybe sell a little bit into this, carry and get the ball rolling.
Brian, I know if folks want to talk to you about some of the actions they could take, a lot of ways to get in touch with you: phone, email, website. How could folks reach you there at Total Farm Marketing?
They can reach us easiest through a phone call. Phone 800-334-9779. So happy to help. Or if you disagree with something I said today, let me listen and learn. And otherwise, Brian with a Y, so BRYAN at totalfarmmarketing.com. Send me an email or check out our website, totalfarmmarketing.com.
Brian Doherty, Senior Market Advisor at Total Farm Marketing. Thanks for being with us again here today on Market Talk. Appreciate it. Have a great weekend, Brian.
Absolutely my pleasure. Thank you so much.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.